What is up, everybody? This is Stock Market Education, and today we're going to be talking about the stock market as a whole and whether or not the price will go up or down in the upcoming months. Let's get into it. The Dow gained more than 5,000 points this week, and the S&P 500 recorded its best one-week upward move since 1974. And past 1974, we'd have to go all the way back to the 1930s to have seen a bigger percentage gain for the markets. We are forced to ask the question, is this price movement authentic or artificial? When will unemployment peak, and how weak will earnings per share be in Q1 and Q2 of 2020? We are currently navigating through uncharted market conditions that investors like you and me will never forget. The United States economy has been shut down, as well as almost every country's economy in the world, and the stimulus package is looking more and more like a temporary band-aid that's been put on a massive wound. Billionaire entrepreneur Mark Cuban said in an interview he speculates that 25% of small businesses will not survive the pandemic, even with this stimulus package program, which would be a major blow to the engine of our economy. And the IMF chief said that the pandemic will unleash a recession worse than the Great Depression, with emerging markets and developing countries likely to get hit the hardest. According to JP Morgan, a recession will hit the US and European economies by July. And it goes on to say that JP Morgan economists now expect US GDP to shrink by 2% in the first quarter and 3% in the second quarter. Eurozone GDP could contract by 1.8% and 3.3% over the same periods. What are investors doing right now? Well, it seems that they're selling stocks and holding cash-like assets. An all-time high $14 billion was channeled into government bonds and $3 billion was dumped into gold. And the money is flowing out emerging market bonds, which saw a historic record of $34 billion erased, and the financial sector saw a record of $3.3 billion withdrawn. Which leads us back to our original question of, is this 5,000 point gain from the Dow authentic or artificial? According to market watchers, stocks are riding a fleeting rally before fundamentals collapse and the real bear market begins, backing their position with fundamentals collapsing before our eyes and the reality that we could see a lengthy recession ahead of us. And when you take a look at the collapsing fundamentals and expected 3% shrinkage in GDP for the US, and Mark Cuban's speculation that 25% of small businesses will be wiped out, and the fact that unemployment rate is likely going to surge to levels we haven't seen since 1940, we're most likely in the middle of a bull trap in the marathon that is the bear market. We might have already seen the bottom because we have seen three strong signals. One is that the S&P 500 dividend yield surpassed the US Treasury yield. Two is that we saw severe oversold levels in the stock market already. And three is that there has been bad news after bad news coming out, and the stock market seems to be rallying in spite of it. However, markets will go down to retest those levels given the fact that unemployment levels remain a big question, and some analysts expect rates to go higher than that of the Great Depression. And the biggest question that needs to be answered is, how long will it take before economies begin to open up? And how long will it take companies to see the type of earnings they were seeing just back in February? I mean, take a look at MGM, for example. 2019's earnings per share was $3.88 a share. Their earnings estimates for 2020 collapsed basically to zero. MGM is not expected to have any bottom line net income for the entire year of 2020, and then expect to get up to 99 cents a share in all of 2021. The sad reality of the situation is it's probably going to take until 2024 and 2025 to get back to the levels we were just seeing 2 months ago in February. There is a chance for global depression. New investors flooding the market during this time, they will be slammed as history has taught us. Thank you guys for watching the video. Click the like button and subscribe if you enjoyed this video, and have a great day. Bye.